Welcome. Super delighted for this panel. I don't know if everybody attended the last panel. It was really amazing. We talked a lot about how crypto is going to change the world. And in this panel, we're going to talk about how crypto is actually changing the world right now. So we have Naveen. Naveen has been an influencer for me a lot in crossing to the other side, to the world of crypto and Web3. He leads South Asia and MENA operations at Ripple. Pega has extensive experience in payments and strategy and is the director of product management at Ripple. And DK is the founder of PayZang that offers seamless payments via unattended vending machines globally, and they have been accepting Bitcoin to accept international payments. So these are actual use cases for crypto in cross-border payments. So with that, I think I would want to open it up, and maybe starting from Naveen, you can tell us how you came across the world of crypto and a little bit background on Ripple.
Yeah, absolutely. So I've worked in payments for quite a long time. So I used to work in the US, covering all the tech names on the West Coast. And as you know, Google, Amazon, the usual, their problem is not that they need credit from a bank. I used to work for Citi at that time, but they only needed transaction banking services. That means payments. You wouldn't believe it. In 2002, I'm in the room with the CFO of Google, and he's saying, hey, you know what? We are receiving all this ad revenue, people who want to advertise on our platform in Forint, in Hungary. What do I do, right? So it was a 200 people company at that particular point. So as internet made the companies go global, payments became a big pain point in terms of both paying and receiving, and particularly because you had products and services that could be sold or could be consumed by people all over the world, and reverse, you could consume services from anybody sitting on the other side of the world. Then how do you do that, right? So that's my background. And then 10 years at HSBC, again, running transaction banking businesses. And then as luck would have it, I essentially said, hey, you know what, what's the next big thing that's going to change the world as we know it? And the answer was blockchain and crypto. And I spoke with Ripple, R3, and Ethereum Consensus, and decided to join Ripple because they had the direct correlation with my work experience and a closest product to market. And like you rightly said, they had already started changing the world. And I thought, let me just come and accelerate and join Pega in that journey.
Yeah, awesome. Pega.
Hi, yeah. So let's see, my first exposure to payments, I think, was my college job. And I was a bank teller faxing Swift papers saying how much money needs to go where. So it was early on. And then after that, I started my career in the subprime crisis. So that was when, you know, you had Occupy Wall Street and everyone was losing trust in financial institutions, and really like the birth of Bitcoin. So I had been following the space for a long time. And then Ripple, it was a no-brainer. I think similar to Naveen, you could see that this had the potential, like, I mean, this technology has the potential to fundamentally change things. And compared to anything else going on in fintech and payments, I thought it's the most exciting. So yeah, on this journey.
Yeah, I remember that 2008, the subprime crisis. I was at Bank of America. So yeah, fun times. DK. Mute, you're on mute.
Can you guys hear me now? Okay, perfect. Hi, Priya, Naveen, Pega, and everyone else on the panel and the general audience. My payments experience sort of started in '99. I joined a mid-tier bank called Zions Bank, and there was a big problem at the time, and especially September 11th exacerbated the crisis of actual physical checks getting exchanged, because no planes took off, and the key settlement used to happen in New York and 4 other clearance centers. And actually, as a matter of fact, one of the first planes to leave or enter the airspace, which were civilian, was essentially 4 supersized jumbo jets leaving the West Coast, El Segundo, going to New York to actually create or liquidity, which is about $1 trillion. For 4 days, there was no financial settlement of actual business checks that happen. Accidentally so that we were working on a way to digitize checks. We invented remote deposit capture, and then we essentially sold it to all the banks, Wells Fargo, Chase, you name it. So now that became kind of the dominant way to do these things. So the company we started was Net Deposit. And so that's how I entered payment, through digitization of checks, and then went into general purpose transaction banking with card and ACH and all the other payment rails that were available. Once the company was sold, I started my own outfit, Payzang, to provide full stack payments, all the way from end-to-end payments for all kinds of scenarios, similar to what we were doing before, with the twist that now the composition was different. We started looking at autonomous payments, machine-to-machine payments, federated payments, payments without any sort of physical entity being present. Enter unattended vending. We saw a big need where there were exchange of value that was happening without a person being present. And so kind of, if you think about that, that is a precursor to essentially where you are looking at payments that are happening without a supervising body. In this case, it was a baby step toward in that direction. And so we started working on unattended vending and how to kind of, expand this globally. In the US, that's fine. You can do that via card. You have to get certifications, to accept unattended payments if you want to do on the Visa rails or what have you. But globally, that was a bit difficult because each region has its own flavors, and card present transactions are kind of hard because you have to certify to each individual banks, acquirers, what have you. It's a whole daisy chained list of providers, if you will. So, and it was not possible to actually do it in, for instance, 192 countries, card present, because there is simply too much administrative burden. Enter crypto. And so for smaller denominations, how do we go about providing or exchanging that value? You can do that via crypto payments. So we started looking at that 5 years ago. And now we have provided that as a subset to a lot of other countries, Colombia, a lot of Latin American countries, some APAC countries. And so now we are doing unattended vending with the assistance of these technologies. So what we do is provide a mix of things. So for example, you can do, if you want to do card present, that's great. If you want to do card not present, that's another situation. If you want to simply use crypto, you can do that as well. So that's kind of a very high level overview of my evolution into, accepting crypto and essentially expanding on that in that domain, providing services and products.
Cool. Thank you. Thanks for that introduction, DK. I have some more follow-up questions on that too, and we'll come to that. But going back to Ripple, Naveen and Pega, like, you know the whole history of Ripple. I know we had distributed ledger and blockchain being talked about. So how did the first use case for Ripple come about? Like where they saw that, this is where the gap is and they can use blockchain to add value.
Yeah, I can kick off, Pega, and you can join me. So Chris Larsen, who's the founder of Ripple, also used to be the founder of Prosper, if I'm correct, right? And that was a peer-to-peer loan company, right? Where Priya could essentially lend money to Naveen, Naveen could lend to Pega, and then the money could go around, right? So he saw the problem firsthand, right? So when you wanted to do it peer-to-peer, the main issue was there was always a centralized intermediary in the middle. For a number of reasons, it wouldn't make it happen, right? And he could see that problem. Of course, if you could still do it domestically somehow, but if we wanted to do cross-border peer-to-peer, because that's where the big arbitrage lied. Imagine Priya being able to lend money to somebody in Mexico who pays 24%, Priya pays 1%. The 23% arbitrage is huge, even after the hedging costs and everything else, right? So the cost of money just 20 meters across the border from Texas to Mexico, 23% difference, right? So that was bubbling in his back of his mind. And then, like Dharmendra said, crypto came along and he met, I assume, I don't know the specifics, but he met the creators of XRP and saw the potential to say how this can change the world, where there is a decentralized system which could globally be available to anybody to be able to send money from point A to point B. And that's how, and he was always true to this remittance use case, which he called as Internet of Value. And that's how the ball started to get rolling. Pega, please feel free to add. I think there would be a few other things I would have missed.
Yeah, I think just tidbits we talk about. I think sometimes it's faster to like physically fly somewhere and deliver cash than send a payment from where you are. So there's obviously a huge pain point there. And a lot of times people would have to, our customers, which are companies, they have to open bank accounts around the world, which was, it's really hard, it's inefficient, it's a struggle. So even in the early days, as we were talking to people, like these pain points kept coming up everywhere. No one had it figured out.
Yeah. No, and I was watching that video on your website about the Thai commercial bank, where they said that if somebody goes to Thailand, all you need is an app. You don't need the local currency, and you can actually use the QR code on the app to make payments. And I thought that was fairly seamless because, going to a new country, one of the biggest roadblocks for tourists is to get the local currency, and the amount of transaction costs are significant. The lines are huge too sometimes. Like I've been in lines in Beijing, and it's been crazy. So I know for Ripple, like cross-border payments has always been big, and CBDCs. I know, Naveen, you've been working on that forever, and done some really covered some big milestones on that. But now I noticed that Ripple's offering a new solution of sourcing crypto assets for financial institutions and businesses. What kind of use cases are you seeing there?
Sure. So let me just quickly lay some ground. And by the way, I'm the appetizer before Pega is the main course. She's the product manager, so she knows it inside out. So let me just at the 10,000 feet lay the ground and then hand it over to Pega. So I think if we think about blockchain as an infrastructure, it fundamentally does three things, right? Or I mean, if you don't take anything else from this discussion, these three things. So one is containerization of money, right? So like an envelope containerizes information, a letter that Priya may want to send to Naveen, and what that envelope has is name, my name, address, and then it has the stamp. It doesn't change the content of the letter, but it moves it from point A to point B, right? Internet does exactly the same thing for packets of data, right? So it could be an email that Priya now wants to send to me. She has my address, IP address, and then it essentially moves forward, right? So, and the internet protocols like TCP/IP or SMTP, for a little bit people who are more technically driven, essentially are the sort of the rails on which, of course, internets are the rails, but they essentially protocols make sure that the content of that email are delivered easily, safely, instantly from Priya to Naveen, right? So in terms of blockchain, that's what it exactly does. And particularly if we take cryptocurrency as a use case, the protocols essentially deliver anything of value. It could be a service, it could be a cement bag, it could be a story, it could be XRP, it could be Bitcoin. They don't ascribe value to that particular thing. Let's call it a thing for a minute, right? But the value to that is ascribed by the markets, right? So essentially what they are doing is they're containerizing value, moving from Priya to Naveen. She has something valuable she wants to give to me, and here are the rails through which it can happen, right? Now let's look at the second part. So the second part is 24/7 trading. Probably crypto is the only asset class in the world that trades against 24/7 US dollar and also in to Japanese yen. So 12 o'clock midnight on Sunday, Priya says, hey, you know what? I want to send money to somebody. She can pick up Bitcoin, she can pick up XRP, Ethereum, give her US dollars, convert that at Coinbase, send it to somebody in Japan, and Liquid, for example, exchange in Japan, can convert that from Bitcoin into yen or XRP into yen, and essentially the payout can happen, or at least the value can get transferred, right? So because of this 24/7 trading, if you look at the financial world, almost majority of the financial world, I mean, Priya, you having worked at Bank of America, and me at HSBC and Citi, is predicated upon that the exchange is not real time. So US dollar markets open Monday to Friday, Japanese yen market open Monday to Friday, but Japanese time, US time, and because there is a time differential, huge amount of businesses, custody, liquidity pools exist because of the time gap. Now that the time gap is not there, so there is a huge amount of disintermediation that happens. And it's not because there is blockchain, because there is a 24/7 traded assets on both the sides with the local pair. That means in this case, XRP to yen pair or US dollar to XRP pair. And that is quite fundamental, right? It's as fundamental as the blockchain technology itself, because 24/7 trading means that value can be transferred instantly and you don't need intermediaries, right? So of course, blockchain allows that, but 24/7 trading allows it even more, right? And then the third thing is this element of community, right? And we use it loosely. You would have probably seen it a number of times, but basically what it essentially means is that people are coming together towards a solution bottoms up, unlike top down. And a lot of time, your first users are your first investors and your first customers and the people who believe in you, right? So there is this direct correlation between sort of shareholders, users, people who are put together in some kind of a economic incentive model, and they're tied to each other, which means that the community is very close-knit, and it is the first users who come together and give feedback on the product, and the product essentially develops from there on, right? So in some way, it bottoms up. There is already you can call it a set of users who are giving feedback, and then the product is coming together. So in a normal case, product will be 80% ready, and you are sort of embellishing the 20% part. But in this case, a lot of products just start with 20% readiness. And then because the community is there and it is tied together in that incentive model, then they work through all the details and everything to work out, right? So, and it's specifically in the case of Remittance, is that Pega, I think I'll pass it on to you, because I think you are best suited to kind of walk through how that came along and how we do it in terms of using cryptos.
Thank you. I have to admit, I was seeing the Shiva and Naveen had a great answer. I lost sight of the original question.
I'm so sorry.
No worries. It's great to see a live coin on video.
We almost dressed him as Dogecoin for Halloween, but decided it would be too mean.
Yeah, I think what we were talking about is just how Ripple has been thinking about new use cases. And Naveen mentioned that, three things. First, that
I was listening to Naveen.
Yeah.
Is it how our new use cases come about?
Yeah, and then how it's community first, user first, bottom up approach versus the other way around.
Yeah, I will completely, what Naveen said completely resonates in that we don't have this fully baked product that we make to, take to market and we're like, here, it's ready. The community that we work with, our customers and partners and infrastructure partners and other people are really just advisors to how we develop, and talking to them all the time, listening. Okay, in the traditional system, these are the pain points that you're feeling and you're facing, and us knowing the crypto technology, we think, okay, how can crypto resolve these pain points, and really have that conversation almost before starting to build. The second thing in our community is everyone, like in the last year, everyone is figuring out how to get into crypto. So if it's on the back end, if it's because they want to offer it to their customers, if it's for DeFi and yield or payments, whatever, like everyone we're speaking to is thinking, how do I get to crypto? How do I use it? How does it help my customers? Is it trading, remittance, whatever? And we have a lot of those conversations. And we bring the crypto knowledge, they bring the not traditional world, but that end customer sentiment. And we work together thinking like, okay, how can we use these protocols and package it in a way that makes sense for your customer? So we develop a lot of new use cases that way.
So can I ask a question, Priya, since
Sure.
I have product management from Ripple? So one of the key roadblocks with remittances / acceptance of payments anywhere is the Aml regulations. And it's huge. it's the biggest roadblock in cross-border payment. And the issue with AML is it's real. And the example I'll give you is if $1 gets in the wrong hands, the operations of that, because you're not above law enforcement, they can come and shut down your company, period, right? How do you avoid that? How does Ripple address AML considerations from a cross-border standpoint? So to just sort of specify or make it too very specific. So for instance, Naveen, I know that you are heading South Asia, right? I'm a company based in the US. I have AML requirements. South Asia, for instance, let's pick a country. India, for instance, has AML requirements. There may be an impedance mismatch between the two fundamental set of documents or process or requirements, if you will. How do you satisfy AML constraints from, let's say, the source side, and then also, or the funding side, and then the recipient side, and vice versa? Does that make sense?
Yeah, absolutely. So let me take that, and Pega, please, happy to, please pitch in. So let's look at a payment. Payment has got two parts. So one part is the messaging layer, right? So Dharmendra wants to send money to Naveen. There needs to be, like you said, AML compliance. You're a good guy, I'm a good guy, and hence somebody gives a thumbs up to say money can do, right? And then second part is the funding part. It means the value needs to get transferred. You have US dollars, I need Indian rupees. In your example, money is moving from US dollar to India. So there needs to value transfer that needs to happen. So let me take the first part. So at Ripple, what we realized is this is a minefield, right? AML compliance is quite important. So we work with licensed financial institution only to essentially do this today, right? So there is a licensed financial institution obligated and has a license in the US. And similarly, they have a license in India as well, and they already are doing it, right? But in our solution itself, we have built new tricks. For example, we do pre-validation. So even if before the money moves, the messaging layer moves to say, hey, you know what, is Dharmendra a good guy, is Naveen a good guy, both good guys, then the payment essentially happens. So least, even if there is an AML hit or there is more information that's required, that is given pre-debit to the account. Because what pisses the customers off is you have debited my account and you're not credited Naveen's account, right? And money is lost for 5 days. But if you're told, hey, you know what, we will not debit your account till we are sure that we are able to do a corresponding credit, you essentially say, oh, I mean, these guys are good guys. At least they're not, I'm not out of money. And assuming that we are able to resolve this, then I'm good. So we have not solved for it, but we have reduced the pain point dramatically through pre-validation, right? And then of course, over time, APIs can carry a lot more information, for example, what a SWIFT format can, and then over time, you look at machine learning, AI, number of tools to say why these errors are occurring in case where there's error, where of course there is a hit, which is in very, very minimal number of cases, then of course you essentially go and report to the regulatory authorities as it is required, right? The second part is essentially the transfer of value. And that's where 60% of the cost of the remittance lies, right? Because Dharmendra to make this payment, for example, not a lot of time would need to keep working capital with Naveen, and we estimate it's about $5 to $10 trillion of working capital that is stuck in bank accounts around the world. A lot of time it's called Nostro or Vostro account. And so, for example, if you want to make a transaction on Sunday, you have to park money on Friday to essentially effect those transfers, right? And we have eliminated that by exactly what I just said, right? So what we have fundamentally done is brought two order books together. So there is an order book at Coinbase from US dollar to XRP. There is an order book at another exchange in India. I mean, we don't do India, but Philippines is a good example, XRP to Philippines peso. And in real time, we are able to bring these two order books together and move money from US dollar into Philippines peso. So within 10 seconds, we are able to transfer that 1,000 US dollars into Philippines peso and through local InstaPay, do the payout. So on one side, we are using API mechanism to move the messages. And on the other side, we are using the cryptos to essentially use the value, to move the value by bringing the two open order books together. Pega, I hope I have not said anything. Do correct me. So you are the final authority. Go ahead.
No, exactly. And I just wanted to add, I think with crypto also convincing people, part of it is the education piece as well when it comes to our partners, because I think when we would first start talking about our product that uses XRP in it, there was some education that XRP is like any other money. It's not necessarily dirty, etc. And people care about like, okay, who else has had this XRP? So the liquidity venues we talk about, but I think there was this connection that people had to make that it's not different than the US dollar that changes hands. In some ways, actually, it's even more traceable, to be honest with you. So there was like a getting comfortable with the concepts piece as well with our partners.
Yeah, I think the perceptions totally changes. I totally agree with your comment this morning too in your introduction when you said that earlier banks used to be like crypto and like try to have a different image about it. But now with all the pre-validation on the AML and the images, the perception's totally changing and there's more trust building around it. So that's great. So DK, yeah, I think there's a lot of match on what you're doing, and Ripple, like Ripple could actually help you do, as you offer more cryptocurrencies.
I mean, go ahead, please finish your thought.
Yeah, so you had mentioned that I think two things. One, you had when we met, you said you only you offer Bitcoin right now, and you mentioned today that you offer a choice between credit card and Bitcoin. So what kind of actual action are you seeing there, like in terms of percentage between credit card and Bitcoin? What kind of numbers are you seeing there? And then I think on Bitcoin, like how are you looking at adding more currencies there?
Great question. So at a macro level, we are offering the combination, which is card and crypto in only 3 countries. Others, it's either or. We either offer card present, card not present, or we offer crypto. For instance, in Latin American countries, the banking regulations to get card present authorization, all of that is onerous. So it could take between a year and a half to get your devices certified for unattended vending. And so there we simply provide crypto options. So there is no other option that can be done in an economically feasible way. So there is that. The combo is available mostly in EU and the US, and also parts of Asia. That's really where the combo is available. Also, there is the nature of payments is a bit different. When we talk about card, really you're talking about a credit instrument being available. And so that in itself assumes relatively advanced capital markets to allow that credit to be available. In certain cases, whenever we talk about cryptocurrencies, that's most likely replacement. Well, it is the replacement for the debit network. You're debiting your account and you're either on-ramping or off-ramping. For the merchant, they are getting the value and they're extracting in USDC or whatever currency that is local, but it is essentially a debit. The credit facilities, unless you are doing some sort of a buy now, pay later type of situation, it really is instant transfer of currency. And so that's how the differences are. So in cases of, to answer, coming directly back to your question, Priya, in Latin American countries and APAC regions where we are accepting crypto, it's 100% crypto. And then in EU and the US, that's where we are providing the combo. And there the percentages are more, probably the penetration between 5 to 10% usage of crypto. Although that varies by regions. The more you go, let's say, towards Eastern Europe, in Europe, you have more crypto acceptance, as high as 20%. The West, the further West you go, credit and debit acceptance is more prevalent. What do you see, Naveen, in terms of what I just presented in unattended vending scenarios?
Yeah. So actually, Pega, I think you work on the receive side. So I think it's a great question, right for you to look at, please.
With respect to like the end beneficiary acceptance of crypto?
Yes.
Yeah, I'll split I'll split into two segments. We have remittance and small business payments, B2B payments. So I'll start with remittance. I think one thing that we like to keep in mind is a lot of what we want to do with crypto and RippleNet and remittances is help the financially underserved, help the unbanked, etc. But the reality of where we are today is that those customers still need cash or they need fiat. If someone doesn't have a bank account, many times from what we see in receiving remittance markets is that they're not at a place where they have a crypto wallet. Not only is the user experience hard for certain specific segments of the market, like, okay, for this group, I'm sure everyone has their crypto wallet and it's easy to figure out and you trust it and you got it. But in other parts of the world, it's not the same. So people want either cash, still even a lot of cash, or they just want fiat in their bank account. Within B2B payments in South America and in APAC, we're seeing more and more people actually want to transact in crypto. I think it's still a fairly small percentage, but we're getting more and more demand of people wanting to stay on ramps or in the crypto ecosystem.
So,
And I think a quick, I think it was Airbnb, the founder of Airbnb said that the top demand among its, I mean, people who host guests, right? So these are called hosts, is can they be paid in Bitcoin or any other cryptocurrency? So that was a top ask from hosts around the world, right? And that's what, I mean, he essentially, I think it was a year ago, he shared with everyone.
So does Airbnb allow, I don't know right now, like, I don't know if they added that, but that's interesting information.
Right now in the US, no. But in other countries, maybe. I mean, regulations very fragmented, so.
Yeah, just like DK's business, maybe more so internationally than the US.
Yeah.
So Pega, on that note, like a lot, this event is actually focused on product managers. How do you see your role being different at Ripple, working with blockchain versus crypto versus like a traditional product management role? Of course, one was community first and being very close to the users.
Yeah. And then the second, I spend a lot of my time on bridging or on and off ramps, like a lot of time on how do you go from crypto to fiat and from fiat to crypto and what do you need to do that. And I think today in 2022 and for at least the near future, building use cases in crypto, or I'll call it like real world use cases in crypto, you have to just think like, how do you go from fiat to crypto and vice versa? That on and off ramp experience is really hard to build. There's so much friction, and how do you do it cheap and fast? I think is super key. There might be a world down the line, I don't know, maybe in 20 years where people just stay in the crypto ecosystem and you don't have to worry about it. And there's CBDCs and other things. But I think for now in the near future or foreseeable future, that's a huge part of building crypto products.
Right. And how does that change? Like where in the product roadmap do you have to think about it? Or like because I know in my breakout room, there were, where you were there too, there were a lot of passionate product managers wanting to learn all about Web3 PM. So just going deep into some of these questions.
Yeah, I mean, of course, it depends on what your use case is. But I think if for products that scale, if you want a bunch of users, if you want to bring new people into Web3, you have to think about it really early on, because how else are you getting that distribution? How else are you getting that customer? Like if it's hard for your customer to put your money in your crypto use case, like you're not getting that customer, you're staying within the segment that's already here. Similarly, if it's hard for them to get their money out, like people will just lose faith. Like, you know, people are lazy these days. That high friction experience just really prevents a lot of people from coming in, unless they're traders and they want to make money on, I don't know, Coinbase or whatever else exchange there is. So I think it is a day one thought.
Yeah, so like right at client onboarding, right? Like right when you're thinking and you...
It's like at design phase, I have this use case, how are people getting in it?
Right.
On-ramping is the hardest part. And I'll tell you from real life experience, 2004, 14, I apologize. I got the request to on-ramp roughly $1.5 million and convert that. This was a Bitcoin trading desk. I won't name the name. And nobody was aware of that. We tried to do it. I tried to do it. I got a subpoena from the New York, basically New York State Attorney General letter that I mentioned to you pre-offline when we were discussing. This is 2014. They said the usual disclosure is KYC. We require KYCC. So not just know your customer, know your customer's customer. Meaning, what will this be used for? Well, the problem at the time, or at least now the ledgers are more publicly available, there are forensic tools available. At the time, there was really not a whole lot going on. Again, remember, this is pre-Coinbase. This is kind of the wild west. We couldn't provide KYCC. There is no way. So we said, hey, the bank where the money is held, this is by this fiduciary, they are in the clear. And then all we are doing is providing them the ability to move it to this particular exchange. And beyond that, once it is converted to crypto, we cannot legitimately trace where it went because that was the nature of it. In the end, we choose not to do that. And so on-ramping now, I mean, obviously there has been more popular acceptance. And with that, there are states also, like for example, Wyoming went ahead and they said, we want to accept currency. Cities, towns are, enacting legislation, which is helping the case. However, a national acceptance strategy has not been developed yet. I mean, I know that FTC has been trying to work on some of that, and there are other agencies trying to do that. But unless there is clarity on that, there will still be reluctance. So, in the near future, as Pega is saying, unless governments resolve that and how they view it, it will be a bit of cloak and dagger type of situation that is going on. Naveen, what's your take? Pega, what's your take on that? Tell me.
Naveen, did you have any thoughts on the regulation?
Yeah, I think to my mind, like it happens in almost every new tech, regulation always follows because passionate people create companies, create business models, and then regulators realize, hey, you know what? One, this is useful or not so useful, whatever the case may be, and then they come in, right? Also, there is a huge regulations play a big part, but also there are lots of business models that are being built, let's call it under the radar, right? So in some way, I mean, had we had this chat, say 14 months ago, and I would have told you that NFT is going to be a big thing, you would have said, hey, what NFT? Who will be buying monkey pictures for millions of dollars, right? This is crazy. There's no way this is happening, but it is happening, right? And people are buying millions of dollars worth of monkey pictures, and they're doing a rocking trade with hundreds of millions of dollars of commerce essentially happening between possibly sometimes two individuals who may or may not have direct linkage into KYC, KYCC, or any sorts of such things, right? So I think regulations need to catch up big time. And I think regulators are realizing that. Probably US is far behind, but a number of other countries around the world, Singapore, UK, Europe as well, for that matter, are streaming ahead to essentially close this gap.
So what does the future look like? This is like before I open it up for Q&A, like where do you, and maybe we'll do a round on this, like Naveen, where do you see like maybe in 5 years, how would the world of crypto look like and what does that mean for Ripple? Or how would Ripple form that, contribute towards that?
Yeah, so I can share a quick anecdote and maybe this is useful for everybody and then Pega pass it on to you. So my son, he's 15 now. When he was 13, a lot of time we will see him in the night, 3 o'clock. I mean, in the morning he's wake up, he's not rested, right? So we knew something's going on. So a lot of time we caught him at 3 in the morning on his computer, on his Discord, right? And first initially thought like me or like us, it would have been good old porn, but no, it wasn't, right? So what we found is that he's a moderator of 3,000 people group, like on Discord, right? And he was moderating a group, right? So one day I just walked with him and I said, does anybody know that you're really 13? He said, no, right? I said, did anybody know your real name, where you're staying? Da, 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 da. He said, no. I said, but I mean, he's like the head man of the village, right? Right. So I say, how do people know you? He said, they only know you me through profile picture, right? So if you look at from my son's lens, he doesn't care about a BMW, a big home, or Chanel or anything like that. The only identity that he has outside of being my son, where he feels all powerful and not judged, is in that 3,000 people Discord group, where he is essentially the head of that village, right? Think of Discord group as a village, right? And the only thing that counts is a picture. So if I look at it from his lens, and there our flex will be these monkey pictures, right, which we just talked about. So if I look at his lens, the future is quite bright and a new flex or new social status is emerging in the blockchain world, which is for the brands to essentially pay attention to.
Yeah. Pega?
Mine seems anticlimactic after that, like inspiring story. I don't have like young children to be inspired by, but I think, well, two things. One, with respect to Ripple and other companies like Ripple, I think sometimes to bootstrap a use case and get it going in spite of, like, with the fact that people outside the crypto ecosystem are laggards in a way, you start more centralized because you need to bootstrap it, you need to get it going, and then over time you start decentralizing that product that you've built. So for Ripple in the long run, that's what we're thinking about. How can we take what we've built, decentralize it more, make it available to other people in the ecosystem to use? With respect to crypto in general, like, I'm a big believer of tokenization, not just money tokenization, but I think a lot of things can be tokenized. Real estate can be tokenized, ownership can be tokenized, identity can be tokenized. And in the long run, I think there's going to be a lot more tokenization and a lot more use cases around that. Again, removing middlemen, like creating like democracy in that. And then the second thing I think that we really believe and think about is, like, you're going to be in this multi-chain future, right? Like each protocol is going to have its specialty. Different protocols are going to be used by different people. But now it's like that bridging between protocols is really difficult right now. And people are going to be building that. And once that gets easier and the user experience of using these crypto technologies coupled with tokenization gets easier, I think you'll see the scale. Sorry, I don't know. There's some echo in my, maybe it's just for me.
DK?
Yeah, no, to add to what Pega and Naveen were saying, I think the biggest eyes in from my perspective, the biggest hurdle right now is ease of use. So it's a vast confusion. There is a lot of development that is going on. It's a lot of centralization on a decentralized concept. Each company is providing its own spin on that and access to that decentralized ledger, but in a centralized fashion. And so, whether it's the alchemies of the world or providing or OpenSea, I mean, a lot of these companies have created centralized infrastructure. The promise is that it will be decentralized. The question is when and how. And then the other part is, what's the ease of use scenario? Like, people get confused. Unless you want mass adoption, that can only come when it gets to the point where you don't require a lot of background to do that. And then how can they do it in a safe way? We are trying to provide a no-brainer way for people to interact with, and essentially doing it incrementally where they can still access the goods and value in a trusted environment, right? Because they are immediately getting the value that are providing, whether it's a car park, whether it's a car wash, whether it's getting soda bottle from a vending machine, whether it's getting entry into a building, whether it's buying all of these things with lower denomination and then building on top of that, whether it's gas vending. Unattended vending is, because it's also scaling very quickly, especially in EU, US, and APAC region. That's, I think, where the first use cases of real denominations, physical exchange of goods will happen. And then once that is done, if you can build that trust somewhat more and then usability somewhat more, then there will be adoption. It will happen. I mean, I don't have doubts about how, but I don't have a crystal ball saying it's going to happen in the next 5 years. You see what I'm saying? Beyond 5, I can't make a prediction. But those are the areas where the focus has to be, product development has to be.
Yeah. Thanks for that. Quick 5 minutes for Q&A. One of the questions I have from Nathaniel is, how does the panel see inflation affecting their work? So maybe how's inflation impacting crypto trading? I know we've seen big swings in the past month, so I don't look at my crypto portfolio much nowadays. But
I can take that very quickly, and then Pega, Dharmendra, right? So I think there are two opposing forces as inflation. So one is cost of money becomes more expensive. So Priya earlier could borrow against her home at 2%, 3%. Now it's 6%. So she may think, hey, you know what? Do I want to swing with Bitcoin or not? Right? So some amount of speculation should go down because cost of trading, cost of capital becomes more expensive, right? What she wants to put out there. I think on the opposite side, the force is that Bitcoin, in some way, it's limited, right? So one could say, hey, you know what? There will be 40% of money that has been printed. It's inflationary in nature. I want to hedge some of my portfolio to be in crypto, right? So there is that adoption cycle, which still is in early stages. So I think these are two opposing forces which essentially will impact the crypto market.
cool.
Yeah, I mean, it's a philosophical question at this point until we have more data. So you can sit on one side of the pond or another. And I think in a few years, we find out if crypto is inflation hedge or just moves with the rest of monetary policy and other investing assets. And I'm sure this will change over time as other use cases develop, but still the bulk of use cases is still trading. So I think I have my personal views on that. And each person will probably have their personal views. But I think with respect to, what we build and how we build products, it doesn't necessarily impact it, right? We're always cognizant of liquidity and how liquidity moves, but we're not making a bet on it. So we build all the same, but with like extra alertness of what's happening with liquidity and what do we need to make sure that we're set up.
Mm-hmm. My thoughts are, I look at it structurally, And that once you sort of segment it that way, you can then reflect in a better way. So crypto is a store of value. It depends. It will certainly be exposed to inflationary pressures like any other store of value. Okay, crypto as a exchange of value, that will not be impacted. The problem is people confuse these fundamental things. Most people's, their approach to crypto, at least from a consumer standpoint, is more of a store of value. I'm going to put this, and it's the greater fool theory, you know, it will keep increasing. We focus on crypto as exchange of value, not store of value. However, it's very hard to decouple because once you exchange it to crypto, it again is subject to those same inflationary pressures. Now, the question, and there was a product question that popped up, what to build? That's what you got to focus on. How do you essentially decouple store of value with exchange of value? If you can do that in a meaningful way, that's where it's at. The reason why there is a lot of buzz about USDC or any CBDCs is because, you know, I am not, if I use that as a store of value, there will be essentially inflationary pressures. If I'm going to put, you know, 100 grand under my mattress, yes. However, if I'm simply using $100 to change or buy products that are $100, the inflationary pressure doesn't impact me as much. And so that the key area of focus, because then you are inflation resistant. I'm not going to say inflation immune. If you can essentially figure out a way to decouple these two aspects of crypto. The biggest risk I see in the crypto world is where the store of value gets deflated and then people lose their life's worth, and then essentially brings a bad name to a technology or a framework, if you will. But if we can focus on exchange of value, which we focus on, hopefully we can do that in a meaningfully decoupled way that we can sustain it going forward. I hope that makes sense, what I'm trying to say.
Yeah, that's awesome. Thanks, everyone. We're out of time. I know there is a couple more questions on the chat. If you can just answer it on the chat, because we want to give at least a 20-minute break before we have Doc Piece talking about NFTs and how to pivot your services into NFTs. That's going to be a very interesting lunch break starting at 12:30. So we're going to have a 20-minute break, and then you can bring your lunch and we'll have a halftime show. So yeah, Pega, there's one question around new skills. I know we talked about it a little bit, but you can answer on the chat too. I know you talked about the onboarding and the design process, but if there's anything else, feel free to answer on the chat. Thanks.
Well, thank you, Priya, for inviting me, and thank you for all the panelists and the attendees. I really appreciate your time. Have a wonderful rest of the day. Bye-bye.
Yeah, thanks, DK. Thanks, Naveen. Thanks, Pega.